Our technology is faster than Facebook right now. Here we go.
There you go. It's live. I see it.
All right. All right. We'll go 3, 2, and 1. All right, guys. Welcome back to another episode of Persuasion by the Pint. I'm Jonathan Taylor, along with
Sean McCool and
a former guest,
RC.
Yes, RC has been on our show before.
Yes.
And we had some interesting conversation in the past. I think that was about 6 months ago. We talked about
good Lord,
crypto investing and all that stuff. Why people
are like 18 months, John.
Yeah, I think it was 2 years ago.
It's been a while. It's last time it was not last time I was in Seattle. It was actually the time before that because we were in your little apartment over the garage.
Yep.
Oh yeah. Okay.
So that was like when I was doing the Go Ruck, when we did the Go Ruck event.
It was 2018.
Yeah, August of 2018. So
when you say it's hard to believe we've had a show for 2 years.
I know.
But yes, we have RC Peck who's coming on to join us again. Today we're going to be talking about, I don't know, people out there may have heard a few things, a few rumblings this week in Wall Street. And, we're going to be talking about getting the power back to the people, right? GameStop.
We actually don't know where this episode's going to go. Let's be honest.
Sticking it to the man. I like that. Sticking it to the man.
Yeah. Is it micro persuasion? Like all these little people starting to affect, big moves? Is it like, I don't know, like that's what we're going to figure out today. Like what's going on. And RC, how would you describe yourself these days? Because, that changes from time to time.
It's pretty hard. I maybe have a foot in finance and investing and the other foot in, NLP, family systems, really understanding how the brain works around money. I mean, I'm a practitioner in understanding how adult humans grow and protect their money. And that's what I've been doing for 2 decades.
Yeah. And there's, we've talked, lots of times about like just the amount of self-persuasion and outside persuasion there is, especially around money and how intense that is. And that's, how many things you can learn about yourself and the world when you put it in the pot of money, and it kind of turns up the heat on everything, right? It's like people are very emotional around money. So I think it intensifies a lot of stuff.
Yeah, I mean, money is a vehicle like alcohol in college, right? It's going to just make whatever deficiencies or pain you have that you're not aware of, and it's just going to 10x it, right? So
10x, baby.
10x.
10x that.
Grant Cardone, man.
Speaking of alcohol, like let's cover our beverages. So that's what we're going to talk about. We don't know where it's going to go.
So let me give the title because I gotta get the title in GameStop Micro Persuasion, how the little guys are taking back control. Yeah. And so now that I got my little clickbait out there,
that's our SEO clickbait version of the title, right? So we'll jump into the beverages. We're gonna let our guest RC go first in his cute little mug. Hold up that mug again.
Yeah, hey, I mean,
that is a cute mug. Like is that a wolf in a cardigan sweater with reading glasses? Is that the whole?
Well, you know this, but that's my nickname, Wolf.
Yeah,
the wolf.
That's not what I had in mind when I I didn't think wolf in cardigan with reading glasses. That's not what came to mind for me.
It's all part of the image. It's all part of the image.
Okay, all right.
Not like the Wolf on Wall Street. That's a totally different wolf.
Different wolf. Yeah, this is different wolf. So. What are you having? What beverage are you having, RC? Ayahuasca.
So, yes, I'm having my second coffee of the day. I only allow myself 2 coffees. And this one is coming particularly late in the day.
I'll say that's pretty, even though you're West Coast, it's still pretty late for you.
It's pretty late for me. And I didn't start drinking coffee until about 7 years ago. And I realized about noon today that I had not had my second cup, and I got all excited that the second one was coming early afternoon. And I will not be drinking beer because my little 9-year-old girl got diagnosed with celiac disease, so she can't eat any gluten.
Yep.
And so in solidarity, I gave up gluten for the rest of my life 2 months ago.
Oh, wow.
And you might not know this, Jonathan, but My alcohol is gluten. It is donuts and zingers and Twinkies and ho-hos and ding dongs and Pop Tarts and cookies.
Yeah.
I would just have to be like, child, some things you have to learn on your own.
You're on your own on this one.
I gotta reassure you though, because I went down this gluten-free thing for about 10 years because my wife, she's still gluten-free. My kids were gluten-free for a while. They're kind of over it now because there were some gluten-related things that the doctor recommended they get off gluten for a while. And we did that for about 10 years with them. So like yourself, I kind of went on that, I went on that journey with them, and it's really not bad because there's a lot of, a lot of gluten-free options out there today. So,
but except for beer, there is no good.
Except for beer. Yeah,
I did buy one, and it was so bad. I was like, all right.
Sorghum beer is horrible.
Would mead be gluten-free?
Mead?
It's not really beer. Yeah, I mean, mead is more close to wine, I guess, because it's made from honey. So it probably wouldn't have gluten in it.
I mean, the thing is, I don't really drink that much.
Yeah.
As it is. So honestly, the donuts and the Pop Tarts and the zingers, which my kids call gas station food.
Yes.
That was my way to check out.
Yeah.
Like if there was a tough day, I'm like, I'm going to go get a box of cherry Pop Tarts.
Yeah. Zingers are the best.
Oh my God. I love zingers. So I'm having to figure out the new go-to.
Yeah. That's a tough thing because you can't find those. You pull into a Pilot or any convenience store. You're limited.
Oh,
you have to go to these specialty stores to get those gluten-free zingers.
Yeah, which don't taste the same. I mean, come on. All right, so you're drinking coffee, French press, I assume.
No, instant.
No? Instant.
I have moved on. It was taking too much time, and
it's such a hassle.
It is.
Grinding it, filtering it. It's like, nope, teaspoon in, done, drink, move on.
You're like my grandfather now.
I am. I've aged.
Give me the Folgers,
it's like it's not Folgers, but
it's Trader Joe's, all right? It's probably Trader Joe's instant. So
they don't have. Do they have instant? I don't even know.
I don't know, but if they did, it would be much cooler. Or Whole Foods instant.
It is a German instant coffee,
of course. Yes. Okay.
Of course.
All right. So I'm
French
drinking.
Press is a lot of work. I mean, that's
but that's the beauty of it. Like I tell you, RC, like since I came to your house last year, it was actually this time last year that I was out there right before all this COVID crap hit. It already hit Seattle when I was out there last, but they just hadn't locked anything down yet. Yeah. And we were using the French press there. And when I came back, I was like, I'm doing that more. Got rid of the automatic coffee maker because it's so noisy. And every morning since I've had French press because it's like my meditation time.
It is good.
And it does taste better. So, but anyway, so I'm drinking leftover beer today. Not like leftover beer left like in a glass, but leftover in the fridge.
He's had this half glass sitting out for a week.
Yeah. So I've got the River Horse.
Oh yeah.
Chocolate porter.
Oh, that's a good leftover.
Yeah. And this is like, I don't know what I rated last time, but today it's like a 4.5. So it's really good.
I think you were like a 2.5 last time. So you're really inconsistent there, Sean.
Well, I had 2 beers on the last episode. So this is third. So what are you having, Jonathan? You said you had a good one.
I have got a good one. And I love the title of this. This is called, let me hold it up. This is called
People Power. I love how you picked it for the episode. That is awesome.
That font is very Coca-Cola font at the top.
Oh yeah, the top definitely.
That's
it is. I just noticed that. That's crazy.
Shake it a little bit before you open it.
This camera really bothers me.
I know
it is
backwards.
A little Coca-Cola. They might.
StreamYard's camera is definitely backwards. Like it is so like disorienting to hold something up to the camera on StreamYard. Other than that, it's a great platform.
Absolutely. Well, so when I first picked this out, I said when I first saw this label, I thought power to the people, man, back to the people. So I thought about our episode, and sure enough, that's the very reason I picked this out. But I will say a couple of things that added to this selection is that this is an Imperial double New England porter. Double New England porter.
That's crazy. That's a weird name.
Yeah.
Double New England. So
whoa. Wait a minute. Nope. It's
New England double port. No, wait.
No, triple.
Wait.
It's triple. No.
Oh man, I think I've totally.
No,
I think I totally botched this.
It's Mid-Atlantic.
Dude, I really screwed this one up.
Completely off.
This is an IPA. This is an Imperial IPA.
That's not even the same universe.
You're an embarrassment.
It's literally other hemisphere.
This is so sad. Look at that.
Oh man,
I'm embarrassed right now.
Well, let me explain.
You made me beg RC to be on the show today, and then this is how you show up, Jonathan. Like it's embarrassing for me and my friend.
Do you know this show is happening?
There's no label. There's one label on this that says Southern Grist and then People Power.
For the record, there's only one label on every beer.
And that's how it works. No, seriously, this is a 4-pack. It was sitting with all of the other porters and stouts. So I just assumed this was either a stout or a porter. And so
now you're cursed with the IPA.
It's better be. So this is all right. Let me give you the spiel on this. This is 8% ABV for a IPA. That's not bad.
97% IP, 97 IBUs.
It doesn't even say how many IBU. I can't find the IBU.
It's off the charts.
I'm pretty good with moving on now. It sounds like a beer that you bought.
It's really sad.
In the discount aisle. It's totally cool, man. Your wife bought it for you.
I'm really embarrassed. We should move on. All right, let's do our taste. We got to do the tasting.
You got that at Kmart on the blue light special.
I won't tell you how much I paid for it because I'm really pissed now.
We know. Yeah. We know how much.
All right, so let's move on. It's going to get a low score. We'll come back to it a little bit later. So yeah, we're talking this week as we're recording this. So today's January 29th. Crazy week in the markets for a lot of people. You had the whole GameStop thing. So Jonathan was like, Sean, you got to get RC on. Like, let's talk about like what's going on. Where's this coming from? And that's where we're going to start, and we're going to see where it goes. So RC, like, I know you give a weekly address kind of to your people. Like, what are you saying about what do you see this week as far as what's going on and kind of how people are? Where's this coming from? Like, this is a pretty big. Is this a first, or is this like?
Well, I think it's a first where retail investors have gone face to face with hedge funds and beat them. So, I mean, there's probably about 20 stories in here, and depending on your website or where you're going, I can tell you all the different stories that are running. So one story is Reddit has forums, and one of the forums is called Wall Street Bets. Mm-hmm. And there's some a-holes in there, but there's also some very intelligent people. And they were picking a fight with some hedge funds purposely. And I think this didn't come out of nowhere. This stemmed from 2008 global financial crisis. No bankers did a perp walk. No Wall Street people did a perp walk. Fast forward to 2020, COVID crash. Only the top 10% are protected. The bottom 90% aren't. People aren't going back to work. They're working from home. You can't bet on games. You got Dave Portnoy with Barstool. And so there's a lot of things coming together here. It's not just one thing. The iPhone, the rise of the iPhone, the rise of technology. I mean, the amount of stuff you can do today at home with 2 screens, you don't need to go work for a hedge fund anymore. If you're a smart guy or gal and you've got 50 grand or 500 grand with some good technical analysis or some research, you absolutely can go head to head with these hedge funds. And hedge funds, no one's feeling bad for them, but GameStop was a company that was shorted 140%. So a short is when you borrow shares from someone else and you hope to buy them back at a lower price. So you borrow them at $10 and you buy them back at $1 and you make 90%. Okay, well, if you're wrong and you borrow them at 10 and it goes to 100, you're wrong 900%. So the losses on shorting are unlimited, and the upside is limited to 100% or 99.99%. So there were a lot of hedge funds short GameStop, AMC, BlackBerry, Bed Bath and Beyond, just to name a few. And so this board, this subreddit called Wall Street Bets, said, let's do this. Now, it's random. It happened to work, right? We only know about the ones that worked, but basically you had a group of retail investors force hedge funds into what's called a short squeeze. So all these individual investors collectively got together and started buying up GameStop, which was close to a bankrupt company. They were going to go out of business. No one's buying cartridge games anymore. I mean, there's a couple stoned 18-year-olds running it. You know,
I mean, they're the Blockbuster of the video game world.
Absolutely. But by the way, Blockbuster popped this week too, and they've been bankrupt for 10 years. But what's fascinating is, like, retail investors collectively now are on par with any quote unquote professional. And COVID accelerated that. COVID said, you don't need to go to Merrill Lynch or Raymond. By the way, Merrill Lynch isn't losing anyone, but you know, people are saying, wait a second, I don't need to just give my money over to the complexity and confusion of big box advisors. And to me, this is fascinating because the regulators allowed 140% short on a company, right? That's the SEC allowing that. They allowed that. And how can that be allowed? Now, and I'm not really taking a stand here. I'm just kind of giving you some of the details here. And so some hedge funds got caught really, really short. There'll probably be a few that go out of business. But then you have to start thinking about the second order and the third order effects, right? So when a hedge fund is down 30, 40%, they sell whatever they can sell. They go sell JD.com or Peloton. Like, when you're on a margin call, if you don't start liquidating, someone will liquidate for you. And so you're having all these other companies getting hit potentially because there's these few companies that are just like, we got to raise money and we got to liquidate. And so to me, it's always been, the stock market's always behavior. Like, it's always behavior. Like, coming into 2020, no one's like, okay, what's the interest rate the Fed's going to do? Is it 0.25% by the Fed? And no, it's going to be 0.5% by the Fed. And all of a sudden it's like, you get hit from the side by COVID. Where was that in your fundamental analysis? Like, if this is just exposing the silliness of what I call big box advisors. It's my own term, but we're taught to look at these the efficient frontier, like, which was created, I think, in the 50s, and all these ideas. And all of a sudden you have a message board take down some hedge funds, and you have Robinhood not allow their
that's a crazy side story, right? I mean,
and that's when you bring AOC and Ted Cruz and Trump Jr. and it's like, I don't think you can turn off. Like, it feels very illegal to say to your clients, sorry, you can't trade this one symbol.
Yeah, I mean, especially for Robinhood, just because of their name and what their marketing stance is, to say, hey, we're kind of for the little guy.
Yeah.
And then when the little guy starts winning, they're like, oh, wait.
But, I mean, that's the joke. Like, they were never for the little guy. They sell their trade history. I mean,
but that's the marketing.
They clear through. Citadel is a hedge fund that does a lot of the clearing. So they get to see all the orders 3 milliseconds before they're placed, which is a lifetime in the world of speech, high frequency trading. And so that's the joke. Like, Robinhood was never for the little guy. The little guy was the product from the very beginning. And 3 dudes in San Francisco became billionaires on this. So again, there's so much to unpack here, but having Robinhood traders file suit in the Southern District of Manhattan against Robinhood app, Robinhood LLC, and Robinhood Inc., whatever the 3 entities are, it's going to be interesting, and it'll probably take months to unpack this. But what's not changing is retail investors, Dave Portnoy, who became big in 2020, people, going, wait a second.
Yeah.
and not that YouTube has the answer because there's so much crap information on there, but people are like, I'm going to go figure this out on my own. And I have to say, I would rather have 20 somethings and early 30 somethings figure out the pain of loss now than at 50. And so it's so fascinating. And it's real. People are falling on either side of this. Like it's getting to be a very, even though I said AOC and Ted Cruz are on the same side, there's this very like black, white, right, wrong, up, down. They're good, they're bad. And from my point of view, it is absolutely fascinating because people are now going to these message boards and saying, I don't know, I'll put 20 grand in there. I'll do this. And never before have we been able to get persuaded by other people by putting up their account balance saying $22 million. And all of a sudden you look at the dude and you're like, 22 million? And so that's persuading people. Now, those are, the tail end of the tail end of the tail. Like it's the outlier of the outlier of the outlier. But because of social media and because there's 500 million people, we're going to get those 15 dudes, and they're pretty much all dudes, come on and go, yeah, I had a 10,000 8 months ago, and now I have 12 million. And so it is inspiring people. It's also very dangerous. I don't want people to get hurt, but we've never been in a situation, and COVID has accelerated this. The economy crashing has accelerated this.
How so? When you say that, like, how has COVID accelerated this type of?
So one way it's accelerated it is we were forced to be inside. So we're not going out. And by the way, guys, most of this are men. Men have more of addiction to gambling. Women have more of addiction to food and clothes. And I'm not trying to pick a fight with anyone, but men have a more leaning for the addiction of gambling. They do more sports betting. That's not where women hang out. So most of this is a male, and it's a young male thing, 25 to 35 years old. Yeah. Those guys are at home. Some of them are unemployed. Some of them are very wealthy, but they're forced to stay home, and they're looking at the screens and they're digging around. There's no game to bet on. And they want to connect with other guys. And so they're connecting on the stock market, and they have, even though $4.95 trades never really mattered, if you have $3,500, it does matter emotionally. So going from a $4.95 trade to a zero, that accelerated everything. And that was brought in by Robinhood. And as soon as they did that, by the way, it wasn't brought in by Robinhood. It started with Charles Schwab back in 1978. And he said, these commissions that the big box advisors in Wall Street is just absolute crap. And he started it. So it was started back in 78. This is just the accelerant of, zero commission. You're locked at home. You can't bet on the football game. I'm going to go onto Reddit and see what's going on. Yeah. And a lot of these people remember 08. I bet you a lot of them had foreclosures. They did nothing wrong. They were screwed by Countrywide and companies like that. No one did a perp walk in 08 or 09. No one. And that is in the memory of a 35-year-old, because that was just 12 years ago. So they're remembering that being in college, their parents getting hurt, their friends getting hurt. And they probably don't remember the .com at 35, but a 45 or 55-year-old will.
Sure.
Yeah. And so there's this comeuppance where, it's a there's a democracy happening that the big box don't own it anymore. And you don't need a Bloomberg terminal. So
that's a question I have. So I'm looking at an article, and it talks about, it says 16, what's it say? It says 9 investors made 16 billion on GameStop squeeze. And 1, 2, 3, 4, 5, 6, 7, at least 8 of the 9 are advisors or management or groups, FMR, BlackRock, Ryan Cohen, who is a big
this was not 18 guys in the basement of their parents' house. Like, you can't take $4 stock to $500 without some major money coming in.
So my question is, it seems like you got this renegade group of people in their basement, shoving it to the man. But I mean, you're talking about Wall Street has some of the smartest, most
Oh, there's
resource.
hedge funds in on this. I mean, Wall Street Bets did not do this on their own. I mean,
So my question is, do you think you can actually beat this? The Wall, I mean, they may get burned once, but they're not going to get burned twice, are they?
Who are they?
Do you think Wall Street? So the hedge funds managers.
You know, there's 2,000 hedge funds.
Yeah. So but is the little guy really gonna be able to consistently beat this, or is this a one-off event and we're not going to see this again? Like, do you think the little guy has enough power now? Do you think we're in that world?
Here's what's
interesting. Do you think the world's flat enough? You know,
the little guy beat the big guy since the COVID bottom. So this didn't just happen in the third week of January 21.
Okay.
Like,
tell me more.
You heard all the kind of these old white guys who are between 50 and 80. They were poo-pooing the 2020, 75% run in the S&P. And you had all these 25 to 35-year-old people being like, no, I'm in. Like, they were right. They won. And all these older people fighting the last war, studying for the wrong test, saying, well, the PE ratio, it's like, no one cares about a PE ratio. The 80s are over, bro.
Yeah.
And because, do you think the PE ratio matters to GameStop or AMC or Tesla? I mean, this is the fascinating thing about investing, that if you really understand it, it's all behavior. And it's always been all behavior. And this is a great example. It's all behavior. And the more people figure that out early on, the better they're going to do.
So what do you mean when you say that it's all behavior? Like, can you flesh that out a little bit for the listeners?
So if you're taught that the only reason you should buy a stock is if it has a moat and a good enterprise value and a good capital on return or return on equity or price to earnings ratio. By the way, these are all very 90s ideas, right? If you're taught that, you're getting hurt badly in the market. Mm-hmm. You're buying crap stocks. You're not seeing what others are seeing. Right. And so what you're left with is, this doesn't make sense, right? Because if you're taught to study for the wrong test, Trump gets elected in 2016. And in 2017 was the most calm, most stable stock market, I think, possibly in history. I think the Dow Jones went up something like 40% in 2017. And so if you're not focused on behavior is price, right? The price of an index or the price of a stock it's everything, right? The price is a collection of the behavior behind that in whether it's GameStop or the S&P 500 or the Dow Jones. When that black line goes up and to the right, that's telling you the behavior of the 50 million people behind that symbol. And
yeah, so you've said before, in our conversations, you're like, it doesn't matter if GameStop is worth 400 or 500, whatever it's up to now. Like, you can argue that all day long. The fact is, there's X number of people driving the price up, and that's where it's going.
GameStop and Ethereum.
Yeah.
And I'm not trying to be a jerk here. Like, Ethereum is worth what people think it's worth. Same as the US dollar or the euro. The US dollar was invented in 1971. The euro was invented in 1999. Bitcoin was invented in 2010. If you're detached, it's all the same. Like, what is the dollar worth? What people are willing to pay for the dollar. Like, this has been the way it's been for thousands of years.
But my question is, did people really find value in it, or was this a coordinated effort to really, because it seems like what we're saying, I mean, GameStop is kind of on their way out in terms of, technology.
GameStop, the company, was definitely it's a specialty retailer that was dying, and it still is dying. Mm-hmm. That just happened to be the vehicle of this subreddit forum to attempt. I mean, what we don't know is, was this their 700th attempt? And we didn't hear of the other 699.
Sure.
Finally, this one went. I mean, we don't get to hear about the 10,000 people that failed in Silicon Valley. We just get to hear about the billionaires who we kneel down to and think they're idols. So to me, it's all about behavior. Mm-hmm. And whether it's like you use the word value, I never use that word. To me, value has no place in growing money. To me, it's like, look, GameStop went from 4 to 500. So we can't talk about, it's not even a hockey stick. Like it was like bending over.
Yeah. But at the same time, like I could make an argument, just, there's a value in GameStop because it was a tool that people could use to make a point, right?
And it's not dead yet. I mean, before we came on, it was up 70% today.
Yeah.
It's worth what people are willing to pay for it, just like crypto, just like the dollar, just like Microsoft, just like Tesla, just like Google, just like Amazon. It's been consolidated and super focused in. But
and what I'm saying is like value is not just what the company profits, what the company can produce in profits. Value may be opportunity. Value may be,
it was very valuable to the people who made tens of millions of dollars in it. Like value is in the eye of the beholder.
Exactly. Right. So like, here's a valuable asset that's undervalued, or not undervalued, but just like it's an opportunity, and the opportunity is the value. Like the company, who cares, right? Could have been anybody. It's not GameStop.
It could have been
CBS. It could have been GameStop because, I've looked at some YouTube videos this week where people back from last year are saying, investors are talking about GameStop, and they're saying, and they're showing the earnings reports and the reasons why this company is solid to invest in. And this was back when it was $4 and something a share back in 2020. And they're saying, you need to jump on board this. I mean, this is, the company is restructured, and they're justifying the reason. But then
which goes back to like the little guy, right? And if you can stir up enough ideology around anything, our last episode, Jonathan, we were talking about, QAnon and like that whole thing. Sure. And like, if you can stir up enough ideology, whatever that word is, you can stir up enough ideas around something, then that something becomes very valuable, regardless of what it is. Like if I decide I want to make chocolate chip cookies, the most important thing on planet Earth, which is not going to take much because they're close already, like we could do that. Like if you had enough people, if you got the masses together, and I think that's kind of where we're at in the world, is like crowds can, I think it's always been that, but it's really catapulted, RC, like you talked about. And like you said, you think it started back in 95 with Netscape, like this ability for the crowds to take more control. I mean, and shift.
07, we got the iPhone. Robinhood does not happen without the iPhone.
Right.
Before the iPhone, I don't know how many millions of miles of fiber was laid across this planet. And most of those companies went bankrupt, and that got us high speed internet, right? It's been happening for a while. I mean, if you can go online, you don't need to hire companies anymore. You never did, but people thought you did. And so it's a flashpoint. Like to me, it has nothing to do with GameStop. I mean, it's a fascinating story.
Exactly.
Being 140% short of something seems illegal, but apparently the SEC allows it.
Who's going to buy GameStop, right? So like, it was a safe bet because like, who's ever going to buy that?
Well, yeah, and then other hedge funds do what other hedge funds do. Like that's the silly thing about hedge funds. If you look at all, and I don't know how many there are, but if you look at the 2,000 hedge funds, regardless of their names, long, short, high beta, low, low alpha, whatever. But if you look, and then if you look at all of the returns for the year, they're within like 9 basis points of each other, regardless of the names on their website. Like they're all doing the same thing. They're all eating each other's lunches. And the markets have been getting manipulated from the beginning. The Fed's been manipulating the market since 1913. And like new people come in, like they're manipulating. It's like, yeah, they're about 105 years into that one.
Right.
And I'm not defending them. It's just like people don't have, they glom onto these narratives that don't matter. And then they end up in these rabbit holes with other people thinking the Fed is evil. It's like, okay, how'd you do this year though? How'd your money grow? Like,
sure.
So you're right. Like GameStop is valuable to the ones who made money on it. And it's also maybe, I'm using the value word, is maybe also valuable to the Reddit people saying, we got you once. I want to see some perp walks, because 9 guys on a subreddit did not take GameStop from $4 to 478 or whatever it peaked out at. And it's the game. The story's not over yet. Like I said, as of this recording, it was up 70-ish% today.
Yeah, and the question is like, what does GameStop do with all that cash?
Well, they don't do anything with it. This is all other people trading it. Teacher in Kansas,
but don't they get? Doesn't GameStop benefit somehow?
Not really. I mean, maybe in corporate, if those people have shares, they're selling them if they can.
Yeah, they're like, man, this is fantastic.
I mean, the 2 stone 22-year-olds working there, they're not
cash out and be on their way.
Okay, so what are some GameStop's? I mean, they've been getting all the news. Are there some other examples of similar companies like GameStop that, because I see BlackBerry, I haven't like heard about BlackBerry in like probably 10 years, and then all of a sudden they're on the radar this week. That
but here's what's interesting, like something that won't change is now Wall Street. I can guarantee you right now, in 1,000 hedge funds, someone's telling the 19-year-old that they hired who graduated MIT at 16, you're on Reddit every day.
That's exactly what I told my wife this morning.
You get on Reddit. I want you on Twitter. I want to see the like, let's go. I mean, they're going to find the ways, and then that arbitrages it away.
Yes.
It just that, and
so that was kind of my question before. Like, can they pull this off twice? Because these companies, these hedge funds, have so much resource and so much.
Exactly, and hedge funds will recalibrate and go, okay, that $12.5 billion hedge fund went out of business in 30 days because they were 30% of their portfolio was short $1 billion crappy specialty retailer. So that was
because we weren't paying attention to this. So now we've got a full-time guy over here.
They didn't manage their portfolio. This is portfolio management 101. This is what happens when 1/3 of your money is in one short. You can go out of business.
So I guess my question is, like, we've got this, the world is flat kind of idea that's been around for a while now with the internet. Can the little guy actually influence, the bigger movers in the world? Or are we just delusional thinking, or that's my question. Like,
things have changed and they are changing. And like I said, they've been changing since 1978. It's been happening. Again, it's a flashpoint. This is like a battle, but not the war. The war is going on.
For our listeners, what was 1978?
So there's only been 2 disruptions in investing in 45 years. One was John Bogle, who he didn't invent the index fund. Wells Fargo did for their insurance clients, but he popularized it.
Okay.
And when John Bogle popularized it in the late 70s, he was lauded and shamed by the entire industry. You fool. The other guy was Charles Schwab, who said, why are retail investors paying these stupid commissions? So fast forward today, and it's still those 2 disruptions. I mean, we have iPhones and we have zero commission, but that was happening way before today. It just culminated right now in zero commission, and there's some index funds that are zero fee. So
which if you really think about it, should be a red flag, right? Like, nobody's doing anything for free. Like,
I don't buy free. I mean, free is pretty expensive. But I mean, I heard someone, I'm not going to say his name, but I heard him talk today, and he's a very rich person. He's like, I didn't know that Robinhood was selling their deal flow to a hedge fund. And like, okay, but how does it work if everything's free? Like, somewhere there's got to be money being made.
Somebody's making money, right? Yeah,
someone's making money, and
like,
the two guys who founded it, or the founders and the hedge and the VC, they're going to make the money on Robinhood. But it'll be interesting to see what happens because,
I mean, if nothing else, like to me, because of your marketing stance, like with Robinhood, and we talk a lot about marketing on this show, it's just a dumb marketing move to stop trading. But at the same time,
and what we don't know
not
is
actually your customer, right?
The real customer did someone tell them they have to stop the flow?
Yeah.
Because it's not as easy.
Who's the real customer?
Yeah.
Is it clearinghouse or is it the individual investors?
Because if they don't manage it properly, they're on the hook, or the company right behind it. So it's very likely they got a call from XYZ company going, this one stock is trading 3x what the most traded S&P index fund on the planet is trading. We are now exposed, and we are exposed by, I'm making this up, we're exposed by $7 billion. You've got to, we're shutting it down. So it may be that it wasn't Robinhood's call, but it was the clearinghouse behind it, or someone saying,
sure,
we're exposed, we're shutting it down. But still, the face of it is Robinhood, and Robinhood's whole thing is the small person, the retail investor. And they've never been for the retail investor. Like it's all BS.
Yeah.
Like,
so that takes me back to like, can the little guy actually persuade and change the overall way things happen?
They don't need to. They can still make money. Like to me, there's nothing wrong with the system. Right? This is part of what's going on in 21. And if you start with the stance that, this is, assume price never lies. Like, if you make that assumption, I don't know why Tesla's worth 900 million, but it's actually not my job to know why. What I do know is it's going up and to the right, and you can either participate in that or stay neutral, right? Like, I don't believe it's us to figure out the why. We'll know in 10 years.
Are those the only two options?
What, Tesla and GameStop?
No. Going with the trend or staying neutral. Can't you, you can bet against it?
You only have, I believe you only have two options. Either believe price is right.
Right.
Because price doesn't lie.
That's what Bob said.
That's the price. But if you, and now Sean, you've heard me talk about this before, but we're taught to care about the wrong things. We are taught to care about the wrong things. And in investing, I mean, I've spent my entire adult life working with adult humans and investing. And I can tell you every single one of them, whether they've been investing for a year or 30 years, they come in and I can tell they were taught to care about the wrong things.
Yeah.
And then all of a sudden I show them, like, actually the only thing that matters is price. And you might not know why the stock market went up the day after Trump was elected in 2016. It's not your job to understand why. It's your job to go, what did price do? And there's about 700 million people behind the stock market. The richest 9% on the planet are the stock market. So when they woke up that day after Trump was elected in whatever, November something of 2016, they woke up and said, all right, we're good. Market went up. And it is voting of 700 million people.
So what you're saying, psychology is everything.
It's 100%. All investing is behavioral investing. It's all behavior, and it's understanding that price. Like there's a saying in technical analysis, people who read price charts to say the only thing that pays is price. If you buy a symbol and it falls in price, you're wrong. If you buy a symbol and it goes up, you're right. and no one teaches price, certainly not big box advisors.
Yeah, most people teach story, right?
They teach story, they teach narrative. They go, oh, Jonathan, how old are you? Oh, okay, answer these 7 questions on a Tuesday. Let's make it about you. Okay, it seems like you're a moderate investor. We're going to do an 80-20. 80% is going to go in these 40 index funds. 20% is going to go in these 7 bond index funds. We're going to recalibrate once a year. We're going to make it really complicated, but don't worry, we'll lower our fee to 70 basis points. And you're just like, the fuck is he talking about?
Right.
I don't know, but he's dressed really nice. The person at the front desk is dressed nice, and they swoop in and be the hero, and that's going away. This is what's being called out, right? It's like it's all garbage. It's all BS. And what I mean by that is the narrative that you need a guy or a gal in a nice suit to manage your money, and the answer is you don't. You don't.
So is this like an erosion of authority in general? I mean, we've watched, with the last couple of elections, I mean, even going back to Obama, like, it's a series of elections where people have just revolted against authority in general. It feels like now this with Wall Street, like.
I told you years ago, Trump got elected for the exact same reasons why Obama got elected.
Yeah, absolutely.
Both times what the voting population of this country said was enough. I've had enough. And so they're saying it with Wall Street. Enough of you guys.
Well, I think, we've seen, right, religion was thing, and people started shunning religion, leaving the church. And I think, in my opinion, they got into politics for the most part, because that felt like a steady, stalwart type of thing. And then that started crumbling. Are we now moving to Wall Street as the thing?
Think what's powerful about this. So there's 80 million, 78 million baby boomers, right?
Right.
And I think we're all Gen X. And then millennials coming behind us, they are a larger population.
Mm-hmm.
They're not going to Merrill Lynch. They're probably going to Schwab. Yep. Schwab bought TD Ameritrade. They're going to, some of them are probably going to Fidelity, but they're going and they're self-managing their funds. They're not going to Raymond James and Edward Jones. Their parents did that.
Give me an app that I can manage myself.
Yeah, here I can see it. I get what's going on. And to me, that's really exciting. I mean, if you walk into a big box advisor, you'd have no idea whether it's 1980 or 2021, other than the screens are thinner.
Well, they're probably not wearing double-breasted suits.
But I'm saying, like, nothing's changed. But really, nothing's changed.
Yeah, they've got skinny pants instead of baggy pants. It's not double-breasted suit coat.
That's right.
It's probably a nice collared shirt.
But they're still dressing nicer than you.
Yes.
They're still confusing you with terms.
Mm-hmm.
The main thing they're doing is selling rapport. Nothing has changed in this industry, and it
you have to make an appointment and come see them, as opposed to log onto an app and get instant information.
Yeah, it's 40 years old.
Yeah, if you watch that movie, I don't know if you're a big fan of the movie The Big Short. It's one of my favorite, but it's it really shows a lot of that, just how the banks, how the big corporations or the these big hedge fund managers, they kind of use a lot of terminology to confuse you and to get your buy-in, just because they use a lot of confusion.
But and they do that, and getting back to persuasion, it's because it works. Like I was talking to, I want to say he's a friend, but someone I'm friendly with who works at a company. They have, I think, 300 billion under management. And I showed him once my approach. He goes, that's great. And I talked about confusion with him. He goes, oh, confusion sells. Complicated. Our clients love complicated approach. They respond to it. We create things that are complicated. And he wasn't being a jerk about it. He goes, that's what's selling. That's what persuades people to give us their money.
Well, you just said something important. Their clients, the people they sell to, like confusion. Because when they use confusing language, that makes them sound like they know exactly what they're talking about.
It's the we both have kids. It's our kids that know more dinosaur names than we do.
Sure. Yeah.
So then they can say those names to us and they can feel, which is great. Like, and it's the same thing that's going on with the big box or advisor world. They use a lot of confusing terms. They create a lot of complexity.
Sure.
And the buyers love it. The clients love it. They go, oh God, I knew.
Right.
You have a research department. Right. And you know, the joke is you can go buy the S&P 500, reinvest your dividends, and you beat them all over any 5-year period.
Absolutely. Yeah.
But you can't, that person would never allow that to be true in their brain.
Mm-hmm.
Because the two things people are not allowed to be is, the one thing humans are not allowed to be is crazy.
Right.
Right.
Yeah.
So if you say to them, actually, you just go buy an index fund, reinvest dividends, and beat your big box advisor. If they've been with a big box advisor for 15 years, their brain would actually not allow them to go, well, what have I been doing?
Mm-hmm.
Oh, well, you've been buying into the narrative of one of the largest industries on the planet. So if that person's able to step back and be detached and go, oh my God, I think you're right. But most people aren't. Most people go, I'm not dumb, you're dumb. I'm not crazy, you're crazy. And so you have trillions of dollars being managed in a unnecessary, complicated way, which again comes back to GameStop and Wall Street bets and message boards and people going, no, you don't actually need to do that.
Yeah.
So it'll be interesting to see what happens with Robinhood, because I don't know if it was them calling the shots, but having a class action suit being filed and crashing the Southern District of Manhattan's website of people wanting to see the legal paperwork, like, I mean, it's a big deal to get an alt liberal and an alt conservative going, let's work together.
Sure.
Yeah. Exactly.
Like, I have to say, that's a big deal.
Mm-hmm.
Like, and I mean, whether you like Ted Cruz or AOC, if you have both of them going up against you, you're in trouble.
Yeah. Right.
I mean, really, like there's something more here. And it's very likely the SEC, it'll be interesting what happens in the next 12 to 18 months. And there's got to be some multi-billion-dollar hedge fund that came in and is like, oh, we can make some money. But I have no problem with, great, make some money. Like, it's always been this way. And if you're going to buy $1 billion stock that has low liquidity and you don't understand that you could absolutely get run over, go buy Amazon at $1.6 trillion market cap. Like, you don't have to fish in that pond.
Hey, real quick, we got a Facebook user. I actually know who this is. This is our buddy. Well, I'm not gonna say who it is, but he says he's confused about the Avengers. Never mind investing. So I think he feels like he's just a little bit lost in this conversation. So maybe RC, like, if we look at this from a lot of the people listening to this show are marketers. Like, what do you think we can learn as far as the art of persuasion and marketing, client experience? I don't know where you want to go with it, but like, what can we learn from this as people who are small business owners, entrepreneurs, marketers? You know, all three of us are in sales and marketing. We have our own companies, like all that kind of stuff. What can we take away from this week to use to make our lives better?
Before I answer, what was the Avengers comment?
He said, so it's Ben Blackman. Wouldn't you know it, Jonathan? It's Ben.
Confused about Avengers. I don't know the Avengers.
Are we confusing Ben? Is that what's going on here?
Apparently, yes. So, like, yeah, that's right. You know Ben. So, yeah,
I will say one thing. Can I mention one thing on
he's not
like
drinking.
the psychology? So on the psychology of influence, we talk about commitment and consistency. So I know a lot of that plays into investing, or people that have, you know, really spent their money with a lot of these big box, investment platforms that they've used for so many years. And I think that there's a psychology to that, to say that even if I'm losing money, I'm still going to trust the expert, because I don't want to.
If you get over a certain dollar amount, so I had my first client at 28. I turned 50 in a couple months.
Right.
So I consider, the male brain stops getting formed at 27.
Right.
So anyone under the age of 30, I consider a kid. Okay. So I started this when I was a kid, and I'm maybe soon getting to be an adult. But here's what I've noticed. When you have $2 million saved in your 401k and brokerage, okay, you're so scared to lose it that you are easily persuaded to go to Merrill Lynch or any big box advisor, because your brain's like, I don't know what's going on, so I have to look for a shortcut. Shortcuts are called heuristics. So our brain looks for shortcuts. He's good looking, he's tall, he drives a Tesla, or she's good looking, she's tall, she drives a Tesla. Our brains have to go to shortcuts because the big box world is not going to actually teach you. They teach you the difference between a stock and a bond, and they think, the clients think they're educated. They're not. They're confused. So one of the things that is happening is most millennials don't have 2 million in the market. So they're not like, well, I can't lose it. But a 60-year-old is thinking I can't lose it. So they use a heuristic or a shortcut called, well, Raymond James been around for 30 years or whatever. So they use Morgan Stanley's been around, so they probably won't steal my money. The brain literally goes to the worst case scenario of, will Morgan Stanley steal my money? Probably not. So I don't want someone stealing my money. So they go to a recognized brand. This is all happening unconsciously, by the way. Right. They go there. The guy uses some cool dinosaur terms. The husband wants to look smart to the wife, or the wife wants to look smart to the husband. They go, I can use some dinosaur terms back to you. They give JP Morgan, Morgan Stanley, Edward Jones, Raymond James, any big box advisor their money. And because they gave them their money, now they're in the Stockholm syndrome loop. And I hope I don't lose you with that, but where the prisoner has to fall in love with the person who has imprisoned them. Like, I'm not crazy. I just gave $2 million as big box advisor, and now I'm paying him 1%. So this must be the right thing to be doing.
Right. That goes to Jonathan's comment about commitment and consistency, right? You want to keep doing more of what you've done.
The more you're going to pay them. Yeah. But Gen Xers a little bit, but definitely millennials and Gen Z or whoever's behind are going, no, don't need you. No, don't need you. I can figure this out on my own. I go onto YouTube. I see some cool videos. I start investing. And some of those videos maybe are just buy the index. Right. And so I don't need, their money may be at Schwab or Fidelity, but they're not paying these fees, and they're not buying into others' narratives.
But I think like my parents' generation, even some of our generation, they were investing with a person. I think what I hear you saying is the millennials, Gen Z, they're investing on a platform. It's a lot less personal.
Yeah, they don't need
money's always personal, but it's less personal. Like, I'm not going to offend this guy if I sell this stock today. I don't have to worry about meeting George at the country club.
It's that relation. That's why all the big box advisors, they have financial advisors, but they're really salespeople.
Yeah.
And they have quotas for new money coming in, and their bonuses are based on quotas. It has nothing to do with how the money grows. Most people don't know this. All their performance numbers are not based on how well the money was managed. It all has to do with new business.
And I was wondering this week. Is a stockbroker, do they, I know in insurance you have a fiduciary responsibility to the end user, but they don't in stock, right?
No, if they're a CFP, when you're a CFP holder, there's about 1 million quote unquote advisors in the country. The word advisor doesn't really mean anything. About 90,000 of them are certified financial planners, where if you have those letters after your name, you are actually a fiduciary, meaning you have to put what's best, the interest of your client ahead of your own.
But most of the financial quote, people don't.
90% do not have to do that.
They work for the company, not
they work for the company. They work to make sure their mortgage is paid. And I'm not saying anything that most people don't know. I mean, this is just how it's been.
I mean, I would disagree. I think most people don't know that.
Okay. Well, it's good to know the incentive of who you're working with. So if the incentive is keep your money under management, then just like Facebook has learned that rage sells, because rage does sell. Like if you get outraged, you click again. The algorithms figured that out. Now, I don't think Zuckerberg started off going, let's build a rage machine, but very quickly the algorithms figured out. They didn't know it was rage. They said, these type of posts get people to click and we make a penny. Give them another one of those. Like, this is truly like AI. It's not the Terminator. It's people getting these. In some ways, it's worse because they don't even know it happens.
Yeah.
And they're not open to outside ideas. Like, nope, this is what happened. It happened this way. I read it twice. And I like the person who I'm reading it from.
So I want to go back again, like Jonathan and I always try to bring back, like there's all this persuasion, manipulation that goes on in the world. And we try to figure out how to use that for good for yourself, for your business, to serve your clients. So again,
you asked me this question. I'd say, I mean, in some ways, I mean, what's great about the small business today, the entrepreneur today, you can have 1,000 followers. And you can offer them something. And if 10% of them buy it and they love your Kool-Aid stand, you can make $200,000 a year and lead a pretty good life.
Right.
And there never was, like, you don't have to have 2 million Instagram followers, right? If you have a solid 5,000 that love you and you're aligned with your brand. I mean, that's what's great about this guy, Dave Portnoy, if you know who he is. He sold a portion of his company to Penn Gambling. And he came out in COVID, and he's like, look, I just started buying when COVID, when everything shut down. And he was like saying things against people you weren't allowed to say something. He's like, Buffett's, old and confused. And it's true. Like, Buffett has not outperformed the S&P for 16 years. Most people don't know that. The guy should have retired at 75. But Portnoy came out and he's like, champagne and diamonds, Coke and hose. Like, he's saying stuff you were never allowed to say and talking down, the Buffetts and going, they're washed up, they're wrong. Give me any symbol, I'll make money on it. And it was fascinating. All the old white people were like, you can't say that about Buffett. Benjamin Graham said, like, and he's like, I'm making more than all of you guys. Like, but he's a personality. He's fun. He polarizes. He's a very likable person. I mean, he says, I'm very prickly. I don't follow him, but he's like, I'm prickly. He probably doesn't like people. Like, I don't like people either. But getting back to
his pizza reviews,
he's fun. Like,
love his pizza reviews.
It's not boring.
Yeah, I mean, and we've said on this show before, and I give credit to Dan Kennedy for this. First time I read it, like, just totally hit with me. It's like people want two things. They want to be entertained and they want to be encouraged that their current worldview is correct. That's it. Like, if you can entertain them and help them solidify their current worldview, not try to change it.
Well, and
I'll love you forever.
And maybe this is, I mean, it's all about persuasion, but that's the problem with people when it comes to investing is if they think gold is a religion, or Bitcoin is a religion, if they buy a crypto newsletter, crypto falls for 37 months. They have an agreement.
They've already bought the story.
They have an agreement with that newsletter, and that newsletter has an agreement with them that we're only going to give you pro crypto stories, and if we do, you will pay us every year our $1,000. And we will not change our narrative once. And whether it's about crypto or GameStop, like screw them, whoever them are. That's what I mean. Like, this is the behavior of the markets, and it's becoming more transparent. And I see no difference between GameStop and Beyond Meat and Peloton and Zoom. It's worth what people are willing to pay it's worth. And we'll know in 10 years.
Sure.
But right now, follow price. And I'm not saying go buy GameStop because it's, changing so quickly. But if there was a religion, the religion should be price is the only thing that matters, and learn how to understand price.
Well, it's funny. Sean and I were just talking. We had a previous guest on our previous episode. We were talking about conspiracies and how psychology is used to kind of move the goalpost, so to speak. And I start to see, when you talk about, because I read some of these crypto newsletters, and it's fascinating, blockchain and all these things. Like I see some patterns there, related to what we talked about on the previous episode, where, even when, things drop, there's like opportunity, so it's like, there's never a bad moment. There's always like, oh yeah, we knew this was happening.
Yeah. I mean, let's be real. Like blockchain is a great story.
And I think it's great. I think that the technology is great.
Yeah, it's like stick it to the man. If you got blockchain, then they can't control you. I mean, that's really the narrative of crypto.
It is similar to the GameStop story, right? And it will come out that maybe a couple retailers made some money, but we'll find out that very large companies made the majority of the money. Robinhood is valued at $15 billion. They're the ones, and Citadel getting the trade flow are the only ones making the money. Crypto, to me, what's interesting, first of all, it's probably owned by 9 guys in San Francisco. Like it's not owned by, 300 million people. It's probably controlled by just a few people, quite honestly. But to me, the fact that crypto is around, let's just talk about Bitcoin, that is still around 11 years in after 3 catastrophic falls. And each time it comes back and goes to new highs, that is one more layer of stability, right? Because it's very new. It's a new currency. If you want to call it a currency, whatever you want to call it, it is new. If it's a company you want to call it, it's great. It's a 10-year-old company. But the more it comes back from these corrections, the higher likelihood it is here to stay. Whatever you want to call it, a ledger, a blockchain, a currency, fill in the blank, it is something that people can believe in. And what's interesting is before crypto, if you wanted to leave the country with wealth and not get taxed by your government, at least in the US, if you want to hand your passport back and your citizenship, it costs you 50% of your net worth. 50% of your net worth if you want to, not be a citizen of this country. But what's interesting now is theoretically, if you had all of your money in Bitcoin, just get on a plane and go, open an app in another country, and there's your money. Like it's better than gold. Before you had to buy you can still do this. You can buy necklaces by the ounce in gold. You can have these necklaces, basically.
They couldn't take your jewelry, right? They couldn't take your jewelry.
They can't take your jewelry. So you can, give me 100,000 in gold in necklaces. They can't take it from you. It's jewelry.
Right.
Now it's like, I'll go put 10 million in Bitcoin. And let's just set aside that it's stability, but let's say it's stable. Cross over to Canada, open up your phone. You just took, 10 million with you. That's pretty interesting.
Right.
And so it'll be interesting.
Well, it almost feels like, like I have some thoughts like, is the government really going to allow this where they can't manipulate currency and things like that? But on the other side of it, it's like, is this just like the next evolution of Visa?
Well, they'll get into it. It's not that they're going to allow or disallow. They'll get in on the game. I mean, you go to China today. So the first time I went to China was in 1990, and they had something called the renminbi. Before it was called the yuan. The renminbi means the people's money. And there'd be bowls of the money. And it'd be little monopoly money, but it was real. And they just sift through the bowl. I mean, it was like it was more than a metaphor. You're like, oh my God, this is all made up. Like, it is so made up. And so you go to China today, no one's got paper money.
Right.
Everything is done electronically. Everything is done electronically. India is going in that direction too. And so it's already happening. Like, it's not gonna happen. It is happening. And China and India, they are controlling it electronically. They get to see what's going on electronically. So it's already happening. How it will happen here, again, it's already happening. PayPal is accepting Bitcoin.
Right.
Square is accepting Bitcoin. PayPal was purchased for $1.5 billion in 2004.
Yeah, that's what I'm saying. Like, it's just an extension of, Visa being the toll gate. Now it's, some other, cryptocurrency is the toll gate, right? I mean, it's just a new medium of payment. Yeah, so it'll be interesting to see how this shakes out. So one more time, I'll go back to, trying to give a takeaway to the listeners. Like, how do we take all of this week that's been just a crazy week really in the markets, and like, how do we apply some of the principles of what we've seen to our own businesses in a positive, ethical way?
Sure. I mean, the two things that I think of is, the first is, what a great time to have your own business. I mean, truly a great time to have your own business. Yes, there's work. Yes, you have to choose some sort of social media platform. Mm-hmm. But you go on to YouTube and there's 25-year-olds or 30-year-olds with 2 million subscribers telling people whether they should have a Roth or a traditional. Like,
or whether they should use like red or slightly off red blush. Like, literally, like
the same thing. Like,
it doesn't have to be anything important.
No, it doesn't even have to be about
important.
And so part of it is like, what an amazing time. Like, it used to be you had to be born white and in the West. Mm-hmm. Truly. Like, yeah. And now today it's like, I mean, all things being equal, it's probably still better to be born in the US today than Vietnam. But I just read an article about this kid from Kazakhstan who re-edited a hip hop song, put it on. He did it through a Zoom call, put it on, didn't think anything about it. Someone mentioned something to him. It's got 135 million views on YouTube. And this Kazakhstani kid's a hip hop star. Now, again, there's, 7 billion of us. So we're going to be able to hear about these one-offs, these randomness of randomness. Sure. Getting back to, kind of tying it up. What a good time to be a business owner. And I'm a horrible marketer. But I finally hired someone who actually loves marketing. And I shamed myself for years for not being good at marketing. And so, just again, answering your question, Sean, is you have to understand how to market ethically. And you don't need 2 million Instagram followers. Like, I've never been on Instagram. But if you have a good story, like an honest story, what a good time. And I think that's what the GameStop is. All of these things happening in the market is Dave Portnoy and Wall Street Bets saying you can do it on your own, whether it's a business. And then the other thing is, just answering your questions, the biggest persuader is ourselves, right? The biggest lie is the one you say to yourself, right? We have to be in on the lie, or we have to be in on the persuasion, because it doesn't work. And so if it's about persuasion and someone's willing to learn, because most people aren't willing to learn, the question someone can ask themselves is, what have I persuaded myself to be true that just might not be?
Yeah. So we had a comment just come in from YouTube, and Wolfgang asked, hey, can we turn this towards taking control of Facebook, Twitter, Amazon, Microsoft, take the companies over and make them better?
No.
Short and sweet.
No, if you don't like Microsoft, go to Google Docs. if you don't like Google Docs, there's, I'm sure, a dozen other companies that aren't those. Like, vote with your wallet, vote with where you go. Those companies are not going away.
So you still believe free market in a sense?
Yeah.
Yeah. If you don't like, and look, I mean, I'm a cynic. I'm a recovering cynic. Like, I have a lot of issues with.
You're not recovering. You're just a cynic.
But I soften it. I soften it by saying I'm a recovering cynic. So
that's
look,
your own story for yourself.
It is that I'm aware of it, by the way. Like, Mark Zuckerberg is a sociopath. He's not going to change. He is hurting humans. High school girls are cutting themselves and thinking about hurting themselves more. And you can go look up the numbers. I'm sure it's up 1x, 2x, 3x. Young boys are getting into gambling and other very dangerous things. Facebook's not going away. Twitter's not going away. Amazon's not going away. Google's not going away. Microsoft's not going away. NVIDIA is not going away. I said NVIDIA because most people don't know that's one of the largest companies in the world. These companies are not going away. They may get split up. Microsoft may become 10 companies. Amazon may become 10 companies. Google may become 10 companies.
Well, Google already did with Alphabet and the whole thing.
I know when they did that. We're getting ready to, and it's very likely we'll see this year the FTC and the FCC go to these companies going, you can split yourselves up or we will split you up. But here's our case. We have 9 million emails of Zuck saying, screw the little guy. So this is happening. Instagram is getting sold. WhatsApp is getting sold. This is happening. So to the YouTuber, his comment, it's
Wait, those are getting sold again. I mean,
they will be spun off.
I mean, that's the natural flow, right? Everything consolidates and it deconsolidates and it consolidates.
Amazon will become 5 companies.
Yeah. Google
will become 5. I mean, YouTube's going to be its own company. Chrome, the browser, will become its own company. The ad thing will become its own company. All the apps become their own company. It's already happening. Zuck may be the richest man on the planet one day. It'll probably be Elon Musk because I think he will probably have figured out how to solve climate change. I do believe the climate is changing. We lost half the listeners, but and he'll be the first trillionaire, right? It'll be him or Bezos, by the way.
Yeah.
If Bezos gets into healthcare and goes, look, I know you're a size for women, whatever, size 6. I don't know sizes for women, but men, I know what your waist size is. I see you take vitamins. I see you get this, powder, whatever. Hey, do you want us to just do your insurance for you? Like we can do your insurance for you. And by the way, if you want a COVID test, we'll just send it in the mail to you tomorrow. That's a great lesson. I think we can take away from this show too. Just that one thing that you said, like, and I was teaching on this earlier to a group, like you need to know your customer's entire life cycle, what they're going through. I mean, I think Procter & Gamble does this better than probably anybody. Like they have followed the baby boomers through diapers, through blah, 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 all the way for diaper. To put it simply, Procter & Gamble has done a good job of following from their kids' diapers to their own diapers. Like everything in between. P&G is not going away.
No. No. And they've got more billion-dollar brands than anybody.
Yeah.
Their brands are worth $1 billion, not just the company. Like their brands are worth billions. They've got like 35 or 40 brands worth $1 billion.
I'm not pro big. I mean, I think big hurts innovation. And I do believe big is getting broken up. Mm-hmm. And when it happens, Bezos and Zuckerberg, because they own a lot, Tesla may get broken up into solar and batteries and cars. And when it does, these 6 guys will all be trillionaires.
Sure. Right? And the product will get better. I mean, you think about like Dodge spun off Ram trucks and Ram trucks got better.
Mm-hmm. Well, yeah. I mean, think about what's going to happen with Instagram and WhatsApp going up against Facebook. You're going to have 3 CEOs. You're going to have 3 profit margins. You're going to have 3 boards. You're going to have 3 C-levels. And even if, and by the way, the Zuck's not going to have a 2-part share situation on these companies. So he may still be the richest person and the biggest owner, but you're going to have the board of Instagram going, let's be a little, let's try this thing over here. I mean, TikTok was invented with Vine on Twitter.
Right.
Like
Sure.
Twitter invented TikTok. I don't know the whole story, but something happened on Vine. They shut it down, but TikTok's Vine.
Yeah.
So we're going to see a splitting up of these companies.
So your answer to Wolfgang is don't try to fight these people. Just put your dollars where you think things work the best. Is that what you're saying? Like more free market? Absolutely.
Like, don't fight Wall Street. Why? Like, you don't have to make it David versus Goliath. Like, you can just go make money. Like, you don't have to be. And I'm very self-righteous, and self-righteous is a very negative trait, by the way. Like, being self-righteous is the highest order of rage and anger. So it goes mad, angry, rage, self-righteous. Like that.
Give us an example of self-righteous. I'm not sure everybody's familiar with that term. I mean, you and I have talked about it a lot. Yeah, I'll give an example from myself.
From a religious point of view, righteousness is not what I'm talking about. And I don't know the Bible, but I know the word righteousness is used. So I'm not talking about it from a biblical sense.
Yeah.
So
I can give an example for myself, right? So like as a life coach, or for instance, like I think I'm pretty good at that. Like I've got people for that. But I have a self-righteousness about marketing myself as a life coach because I think everybody should just flock to me.
You shouldn't have to.
Have to do whatever. Exactly.
Guess what?
Hence the medals hanging from. You see those little medals hanging from?
That's Spartan.
They were purchased on Amazon. Let's just call it what it is. I can get them.
They were not.
His art behind me is fake.
They were purchased on the Spartan website because they got me to make me think I was a Spartan. But yeah, I did have to run the race.
So there's two different things. There's two different ways to look at this. Are you a user? I don't get the impression that you're a user of Facebook and Twitter very often.
I didn't know what they are. Let's be real. Now, he knows what
I'll say. I advertise on Facebook.
Yeah.
I own my name on Facebook and Twitter and LinkedIn and Instagram. I got my name, either my actual name or my company's name. I have no idea how to use them. I have no interest in using them. I watch video. I'm dyslexic. I love YouTube. I like going on and watching stuff. I've been posting videos on YouTube probably for a decade.
Sure.
I've been very self-righteous about marketing myself. And I always thought if you just put content on, it will do well. And the answer is it won't, because YouTube doesn't care about good content. They care about thumbnail, keyword, description, like these things that I was very angry that I had to learn. And so I never did learn them. But what I finally did is hire someone who's like, oh, that sounds fascinating to figure out the keyword phrase you should use because your content's really good, RC. So like, this is what YouTube ranks as good. Like that's what I mean by self-righteous, but it's mad, angry, rage, self-righteous, because at the self-righteous, you're pulling the temple down on top of yourself.
Yeah. Yeah.
You're hurting yourself for no benefit.
So, man, we could talk all night on this, but Ben just asked, he said, isn't part of the reason Reddit people did this whole thing with Gamefly about sticking it to the man? And yeah, it is, but to what end? Like, I mean, it's a great headline for the week, but is it going to change much? And is that going to help their lives much? I mean, maybe a few that that had the money to invest. I guarantee there's a lot of $20 investors in that group too.
Yeah.
But it's also like you get to be part of it. So let's say you put $100 in and it's now at 200. You now have this awesome story. I made 100% on GameStop.
Oh, you can tell that the rest. It's like the high school quarterback. You can tell that the rest of your life.
And there's no lie there. I mean, there is a lie because it's posturing. You know what I mean? Like, I mean, this is what we get back to. It's not worth it to stick it to the man. That's a self-righteous thing.
Exactly.
Like,
it's not coming from.
If you are angry that you're not richer, then you need to look and go, what are you doing for income and how are you doing it? And what have you turned away from? And what are you doing with your save? Oh, you don't save money? Well, there's probably a problem there. But if you're stuck in this stick it to the man, you are pulling the temple down on yourself. If for no other reason, you're losing years or decades of your life, even though you can be in some subreddit where there's other self-righteous people raging against the machine. Like, you should have
that's why I mentioned Facebook earlier, because people at the end of the day, people are motivated by their own self-interest. So you separate Facebook or any of these social media apps into two different platforms. Like, people that use them and they say, I'm never going to use them again after all of this stuff. And then people that invest in them or use them to make money that say, you know what, I could care less of what Facebook's politics are. I'm making money off of this and I'm going to keep doing it. Right. And then so many people over the last couple of weeks after the, with the political situations, say, I'm abandoning Facebook. I'm getting off Twitter. I'm looking for alternative social media platforms. But at the end of the day, these people are still there. I look at it 2 weeks later, they haven't changed. They haven't left. You know why? Because at the end of the day, Facebook's the biggest one, but they have so much, we talk about that addictive nature. They've got your photos. They've got all of these memories that you've stored up. There's a level of investment that you've made over a 10-year period, if you've been on Facebook that long, that you're not willing to give up. And I swear you will not give it up.
Yeah, that stickiness and that. It's funny how like social media, like we've gotten so caught up in the it has to be back and forth. Like if I'm a marketer, right? But it's really just like TV. Like if I want to advertise on Facebook, I could treat it just like TV and have a team that responds to comment. I don't have to do it myself.
Right.
Like there's no law, there's no rule, there's no, better way or not better way that says I have to be the guy that's answering comments on Facebook all day long.
Yeah.
I can use it, and it's probably a lot healthier if I use it as a medium, just like TV or radio or newspaper from 100 years ago.
Well, and people are learning that you have to get them into your own sphere, right? Yeah. So if you want to go fishing on YouTube or Google or Facebook or Instagram or Twitter, you got to get them over to your pond, because at any moment Twitter can go, you know what, we're just not going to allow advertising for anyone who uses the word religion.
Yeah.
And they're a private company. I mean, no, they're public, but they're not a public entity, right? They're publicly traded, but it's a private company, and they can go, we just don't like the word religion anymore.
Yeah. It's crazy how since the whole, the whatever happened on the Capitol, like
January 6th.
Yeah. Since that day, like all of a sudden email's cool again. Like, right. Cause you kind of own your email a little bit. You don't really, but you kind of do. Like email is like taking off again. As you know, RC, I run an agency, and like email is cool again.
Unless you're on MailChimp, I gotta say.
Yeah. So like,
I didn't say that. You didn't hear that, but
yeah, even that's people are watching. So, yeah. So I guess like we could continue like recycling this and everything, but so RC, like this has been a crazy week on Wall Street. Truthfully, a lot of them are crazy weeks on Wall Street. They all seem very intense in the moment until you pull back and kind of look at the bigger picture. But so what's your biggest takeaway that you could leave with our listeners about kind of what's happened and how to best, just from a sanity standpoint and human behavior standpoint, persuasion, kind of taking all those things in, like how do we move forward as business owners, as entrepreneurs, as marketers? That's mostly who listens to this show.
Yep. What
do we do with all this?
I mean, I would go watch Dave Portnoy, because he came out in the shutdown. I'm in Washington State. We're still shut down. And so as a marketer, there are people who are their own people. Like, I don't think Dave Portnoy is posturing. I don't think he's bullshit. I think that's just who he is. He's just a prickly, I'm going to say whatever I want to say guy.
Right.
And as a marketer, and to wrap this up just with your question, be like, are you being who you really are, or are you being who you think you're supposed to be? Because if you're being who you're supposed to be, then you're hurting your brand.
Mm-hmm.
And I've postured a lot of my life. And posturing is a nice word of saying, you're kind of lying, but you're posturing, like you're trying to be. And I know there's a lot of posturing.
Or you're afraid.
You're afraid to actually, but you look, and you and I both know small companies that are getting much bigger, and the women and the men that are leading that, they're just being who they are.
Mm-hmm.
Like, this is actually who I am. And people are like, I want to be friends with her.
Yeah.
I want to be friends with him. Right? Like, I like, or like the women are like, I want to be friends with her. And men are like, I want to date her. Or with men, guys are like, I want to be friends with him. And women are like, I want to date him. Like,
right.
It's the more you can connect to who you actually are. And some people get that at 60, some people get that at 30. And
I do think the younger generations are getting that faster than we are. Like, I think of course, you kind of, I think as you grow up in the technology world, there's probably a faster learning curve.
Yeah, look, in 15 months, you could probably make 80 videos and have them perfectly keyworded and thumbnailed and description. And you could be a no one that knows nothing about makeup.
Yeah.
And you don't even need to be a woman, by the way. And you could have 500,000 subscribers on 80 makeup videos.
Yeah.
I'm just using that as an extreme, because you don't even need to be a woman. You just need to understand the algorithms of what's driving YouTube to go, hey, maybe this one over here looks good. It says the right way to put on eyeliner in 5 minutes.
Yeah.
And YouTube loves that. And you happen to be a guy with a beard, but it doesn't matter, because YouTube is seeing what it's measuring. Right.
I mean, I remember when I showed you Jeffree Star, like, it's like, here's a guy who's doing makeup tutorials and just like crushing it. Just making a fortune on makeup. And
I think that's who he is.
Yeah. And I think it really, you kind of alluded to it, but the 1,000 true fans idea, that's probably the most accurate, that article is what, 10, 15 years old now?
It's Kevin something, right?
I think Kevin Kelly or something.
Kevin Kelly,
like
yeah. 1,000 true fans.
1,000 true fans. Like,
just think about that. Like,
to this day, like, just
the
dead
fact
on.
that you have 1,000 true fans and make $250,000 a year,
Yeah.
And you can live anywhere on the planet.
Yeah.
You just need internet access. Maybe you don't even need a good microphone or a camera, but just camera, internet access, laptop, phone. $250,000 a year in 18 months.
Yeah,
it's crazy. I mean, and don't get caught up, I think, in the hype of it's got to be 7 figures, it's got to be $1 billion, it's got to be whatever. Like,
if you know what enough, I mean, if you like, and I struggle with this too. Like,
oh, we all do.
There's enough, like, when you have enough, and then I just love what I do, and I want to keep pushing it.
Yeah.
Right.
Well, Mark Ford, Michael Masterson, Mark Ford from copywriter, like he talked about, like, if you can hit that 250 mark, like, you can pretty much have whatever you want. Then it's just degrees of niceness from that point on, right? It's really like everything you want, you can have 150, 250 kind of range. Sure. After that, it's just levels, right? So, wow, this is a weird comment on YouTube. I guess this is like hashtag, like, it says diamond hands, wash hands, wash hands, wash hands. I have no idea what that.
Thank you.
I feel very old.
Thank you, Diamond. I appreciate that. We'll say something about the 200.
I will say, Sean, we're doing something wrong. We need to reevaluate, because we got like 11,000. We got like 11,000 download listeners, and so we need to.
It's all about RC. We just need to have.
I confuse people.
But I will say, what's cool. My biggest takeaway in all of this is that, you know what? Technology it's really leveling the playing field.
It goes back to that whole flat earth, flattening the earth idea. What's that? When was that from? Do either of you guys remember that whole idea of, like, the earth is flat? Not flat curve. That's a different thing.
10 technologies that flatten the earth.
Yeah.
The only one I ever remember is containers.
I mean, there was a guy who actually kind of coined that phrase, like with the internet and all that kind of stuff. And, us, the three of us remember, because we're Gen X, we're kind of that weird generation, like where we've lived in both worlds, where we went out and like, we actually went places without a cell phone, without GPS. And like our parents didn't know Ben and I were talking about this today. It's like, we went to football practice and like, how did we tell our parents when to pick us up? They just showed up. Like we didn't have
exactly.
a phone or anything.
Right.
And we kind of straddle that, that world.
At the end of soccer practice, I would call my mom, Collect. She would hear my name and be like, "Oh, he needs to be picked up."
Absolutely.
So I never had to have money with me.
Yeah.
That's right.
On the payphone. Like the people don't even know what a payphone is. Like
there was a line for the payphone. I'd do a collect call and 10 minutes later my mom would be there.
Or you go to the teacher's lounge and you say, "Hey, I need to use the phone to call my parents." Like, and then, all that stuff.
I think my kid's the only 7th grader at his school that does not have a phone.
Yeah. It's
great. Like, he can get one in 8th grade if he's got the money. So
Mr. Dickinson, I don't know what he's saying, but he's like, he's holding, he's not selling. I don't know what he's talking about, but Mr. Dickinson, I appreciate that you're in the episode. I have no idea what you're talking about though.
So whether it's investing, whether it's publishing, whether you're, creating a YouTube channel, barriers are closed. I mean, the barriers have been leveled out. So I think that's, it's exciting times to live in. I find that it's interesting on, we've got certain segments of the population that are frightened of like where things are going, in terms of politics. But I find it, I look beyond politics because, politics it's like a pendulum swing. It's like watching one of those little pendulums on a clock go back and forth.
Yeah.
Forget all of that. What's exciting is the times that we live in, the technology that we live in, and the fact that we have platforms that we can use, that we can invest, and we can bypass a lot of the people that we've had to pay large sums to, that have been middlemen for so long, whether, like you said, whether it's publishing, whether it's, putting out content and stuff like that. It's really, it's really a cool time to live.
The one thing I'll say that of what you're saying reminded me is, and you have to be in a community.
Yeah.
You have to be part of a community that can hold a standard. Mm-hmm. Like, and have someone call out like, "Jonathan, you're being self-righteous here." No, and be like, "Okay, shit.
Yeah. Okay. Yeah.
You don't have to learn how to market, but you do have to have someone marketing for you."
Sure.
Like, I think, and this is part of me projecting too, like when you're isolated. So this is also part of your question, Sean. Like, so when you're the entrepreneur and when you're a marketer, are you by yourself in a room, in your house, on your own, isolated? Mm-hmm. And if so, you're absolutely leaving money on the table. Like, you've got to get with a group. Maybe it's 5 dudes in your town or 5 ladies in your town where you can hold each other accountable and say, "We're all making 100,000. There's no reason why we can't all be making 200 by this time next year." Right. And you hold it like that community thing, which interesting is the internet has pulled us away from in person, but it's also brought us to like, okay, the community doesn't need to be in our town. But I think that's the thing a lot of entrepreneurs are missing. And I don't mean entrepreneurs having to be in like a mastermind where they're paying for it, but just go.
Even conversations like this. I mean, and RC, you and I talk from time to time. Ben, who was on the show on the comments earlier, he and I are now, we picked up our meeting once a week again. Like just being in that community, and being intentional about it and just staying in touch with people matters. Yeah. By the way, so we've got a new comment from Bomb Vile. Diamond hands until I die. So I had to Google, like,
Diamond hands is just crushing it right now.
Like I had to just like look up diamond hands on Google to figure out what the world's going on.
Sure. Right.
And it says, if you've got diamond hands, you're ready to hold a position for the end goal, despite the potential risk, headwinds, and losses. If you've got paper hands, you exit a position or fold early on because the heat of the situation might be too much. So that sounds more like your world, RC, than mine. There's a whole video for you, RC, right there. Diamond hands versus paper hands.
And the thing is, I don't like conviction is the price.
Yeah.
Like
Conviction will get you
sharing
burned.
some of my trades, and then I stopped. I said, I don't want to share a trade until I'm completely out of it, because I could share something I'm in, and if something changes an hour later, I'm like, I'm out. Not like the wind changed, but I bow to the altar of price.
Like, even if it's the right reason that you're doing, if you want to stick it to the man and that's your thing, like, but if you get too caught up in that story.
Look, if you buy Bitcoin at 100,000 because you want to stick it to the man and it's now at 10,000,
you lost.
Didn't work out for you there, brother.
Yeah.
Right.
Exactly.
So the way you stick it to the man is you are healthy. You have a great relationship with your wife. You're not in a sexless marriage. You have friends that you like, and you have friends that like you. You have kids that love you and feel loved by you. That's how you stick it to the man. I mean,
right.
I lived in Silicon Valley for 19 years, and I can tell you, super rich people, they're in sexless marriages. They're mostly assholes. There's very nice ones too, but if you really want to stick it to the man, don't be in chronic pain.
Have a good life, right?
Go out and run with your buddies. Go do some rucking. Go laugh.
What do they say? What's the old saying? It says the living well is the best revenge.
Is the best revenge.
Yeah. So
yeah,
there you go.
Like that's how you stick it to the man. Like every time I see someone who is like crushing, I'm like, dude, that guy's 150 pounds overweight. And I don't mean that as a judgment. I'm like, why the pain? Like that's a lot of pain to hurt your body like that.
Yeah.
Like that person's in pain. They won the commercial financial game. Woohoo, big deal. It's actually the easiest of them to win. But if you want to stick it to the man, you opt out of the game and you make a lot of money, or you have a great life. You have a wife that loves you or a spouse that loves you. You have kids that love you. You're able to run a 7-minute mile. Okay, I'm joking about that. And you love what you do.
Yeah,
absolutely.
I think that's a good place to end. I mean, we could talk all night on this, but yeah, I think that's a great point. Like, it's not one area of your life. It's not just the money. It's the entirety. Are you living well altogether?
We all know the guy who's got the awesome marriage, and you're just like, screw that guy. You know, it's so. I mean, I'm talking about a real, genuine, great marriage.
Yeah,
like
you take that over the money any day.
You got nothing on him.
Yeah, for sure.
Right? It's like, and those are rare.
Or the guy that can run the 6-minute mile and has a great marriage and his kids like him.
Yeah, and he's detached from whether you like him.
Eye on financially, like you'd rather have that than the guy that's crushing it financially.
Yeah, and it's not either or.
No, it doesn't have to be.
And talking about sticking it to the man, you know, live a great life.
Absolutely.
Which is not trivial. Like you've got to work out, you've got to get 8 hours of sleep, you got to, go easy on the alcohol. Damn it.
I knew there was a catch.
You got to love what you do. I mean, I've told so many men, like, you need to get a divorce. Mm-hmm. By the way, I'm divorced. I'm a single dad. And it's amazing how many men come to me and they're like, I mean, what's it like on the other side? I mean, I haven't had sex with my wife in 5 years and we don't really like each other, but we got a 9-year-old and should we wait a decade? I'm like, wait a decade to start living? Like, yeah, it's scary, but I mean, there's greatness out there, whether it's your company or just living the good life, and it's work. It's short-term hard work, long-term great life.
Yeah,
that's right.
Well, Bomb Vile and Mr. Dickinson are lighting up our YouTube, so we appreciate it. We really appreciate that. And but RC, like, where can people find out more about you and what you do?
Same place for 23 years, fearlesswealth.com. It's a website. Websites are a place where you can put your information about your company. Fearlesswealth.com is basically where I'm found.
Cool. This has been a blast. I mean,
sounds like that's where some of our listeners probably should go.
Yeah,
It's all fun. We enjoy it, man. We need to do this again. You know, I think we've had more comments on this episode than probably any so far. So
RC stirs the pot, man.
you stirred some pot. Yeah, you stirred not one pot, but several pots. It seems like.
Yeah.
All right, man. Listen, have a great weekend. Enjoy your life, as we talked about. All right.
Thanks, guys.
Hey, thanks.
Hang out in the green room for just a second, RC.
Yeah. Hang tight. We're ending the broadcast right here. Goodbye, everyone. Oh, by the way, you can find us over at persuasionbythepint.com. You can find us on all of your podcast channels. You YouTube guys who like to who are making comments, you know where to find us. And we'll see you on the next episode. Thanks, guys.